Live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, after yesterday's spectacular and rocking rally that we saw, we're expected to see certain cool off today because the GIFT Nifty is hinting at a gap down start for India. But yes, the tension and unease that the investors saw due to the cross-border tensions seem to be a calm at this point of time. Yesterday, we had the Prime Minister addressing the nation and his first address since Operation Sindoor. He gave out a staunch message of the fact that we will not be afraid of a nuclear blackmail and there is a zero tolerance for terrorism. And even if there is any talks with Pakistan, there will be on the grounds of Pakistan-occupied Kashmir, which is your POK. Over the night, we also saw that the Indian Army has said that no new enemy drones have been reported at present and the situation along the line of control is under full control at present as well. So border peace, the ceasefire also continues for the third night in a row as well. So yes, quite a positive on the border tensions as well. And globally also, we saw the contours of the US-China trade deal yesterday, and that has increased the risk appetite of investors as the tariff uncertainty is out of the way. It is reflected well across the global markets. If we see, we saw that the overnight US markets have posted the best day since April 9, and Asian markets have also started on a largely higher note. If you look at the commodity prices, crude prices have also seen a jump up on the hopes of an economic growth and an economic rebound as both of the biggest economies grow. Basically, after the US-China trade deal has been announced, so they're hoping that the tariff uncertainty will be out of the way at this point of time. So all in all, a very positive picture to start off with, but a certain consolidation is expected to see, given that we saw the best single-day rally in 4 years yesterday. Now we'll also take some stocks in focus. Q4 numbers, a fag end of the Q4 numbers we are here. Tata Steel will be reacting to its good set of Q4 results. Tata Motors will be reporting its Q4 numbers as well today, so we'll keep watch out on that. Also, like usual, we'll also be taking up your stock related queries, so keep dropping them on our live feed and we'll take them up shortly. Now let's quickly take a look at the top headlines this hour. Prime Minister Narendra Modi says talks with Pakistan cannot coexist with the terror. In his first address since Operation Sindoor, he made it clear that India will not tolerate any nuclear blackmail and that operations with Pakistan is kept in abeyance and will depend on the future course of action. US President Donald Trump continues to claim that he helped broker a ceasefire between India and Pakistan. At the press conference, he said that both the nations were having hot and it was the US that helped stop the nuclear conflict. US futures under pressure after stocks rally in the Wall Street following the US-China agreement to slash tariffs. Dow surges over 1100 points while the S&P 500 rises 3%. Asian markets opened largely higher as US-China slashed tariffs for 90 days. However, the GIFT Nifty is implying a gap down start for our own markets. Oil prices rise as hopes to end a trade war between the two biggest economies increase. Gold prices fall as risk appetite grows. All right, like I was mentioning that in yesterday's trading session, we did see a spectacular rally, the biggest percentage increase in a single day in about like best single day in 4 years. Sensex and Nifty were both up and ended about 4% higher, and they ended at the highest closing level so far that we have seen in this year. Both the headline indices also touched a 7-month high, and if you look at the BSE-listed companies, they added nearly 16 lakh crore rupees of MCAP. If you look at the broader end of the markets, both of them outperformed and outsmarted the benchmark indices as well, both the mid cap and small cap, and all of the sectoral indices ended in the green. Even Nifty Pharma index, which came under pressure after Donald Trump announcement of lowering drug prices in US, despite that the street shrugged off any concerns and ended flat in the green. If you look at some of the sectoral indices which actually stood out as the winners, that included the likes of realty, power, IT and energy, all of them surging between 4% to 6%. Definitely IT and metal stocks saw huge gains after US-China tariff decisions were out. Coming to today, some Q4 results, as I was talking about, will be out. Tata Motors is slated to report its Q4 numbers today. Other than that, we can see Cipla, Bharti Airtel and Gail also reporting its March quarter performance. Now, what are the three main cues that we'll be highlighting for the today's trade setup? First up is your fund flows, where we can see the FIs have turned net buyers after one day of pause. They've bought stocks which was worth about 1,200 crore rupees in the cash markets, and DIIs also in unison with the FIs have bought stocks which was worth about 1,400 crore rupees in the cash markets. If you look at the option queues data, very bullish sentiment coming there, because the Nifty put call ratio has jumped to about 1.29 levels from about 0.94 in the previous session. And in the FNO ban list, the stock that has been retained include the likes of CDSL and Manappuram Finance. On the other hand, RBL Bank is out of the list. So yes, quite a good sentiment that is coming from that perspective. Now, just a couple of minutes before we go to the open, but let's see how the pre-open rates are standing at this point of time. Sensex is down about 180 points. Nifty is also down about 60 odd points, but below that 24,900 odd levels. So yes, on that note, let's quickly get on board with the technical expert of the show. Joining me is Jatin Gedia of Mirae Assets Sharekhan. Jatin, good morning. Yesterday, spectacular rally for the markets that we saw, and now we are just like 5% away from its lifetime highs. Can we expect record highs soon?
Good morning, everyone. So, in yesterday's trading session, 550, 24, 600 was decisively breached on the upside, and the Nifty closed well above that. So now that puts the bulls in the dominant position. On the upside, what we are expecting on the immediate basis is 25,300, which coincides with a 78.6% retracement level of the entire September to April decline. So now on the upside, that is the immediate level that we are working with on the upside. In terms of supports now, 24,600 is likely to act as a strong support as per the role reversal principle. We believe that any dips like today that we are getting in the early morning should be considered as a buying opportunity, because overall the undertone is bullish, and now minor degree pullbacks towards support zone should be considered as a buying opportunity. So overall, our view on the Nifty is positive. Immediate levels 25,300, and support is placed at 24,600 in the case of Nifty. Bank Nifty has broken out from a bullish flag pattern on the upside. It has witnessed 3 weeks of consolidation. It has reverted back to its 20-day average, and thereafter again we are witnessing a start of a fresh leg of up move. So Bank Nifty is one index that can witness new all-time highs immediately. On the upside, we are expecting 57,000, 57,200 in the case of Bank Nifty, and support is now higher at 54,600. So Bank Nifty can touch fresh all-time highs, while Nifty might take a little more time to do that.
Okay, all right. Jatin, yesterday we saw that the IT and metal indices is also one of the top performers, given that the US-China trade deal has been announced. How do you see both in the sectors on the charts going ahead?
Yeah, see, in the case of IT, I think it had undergone a 30, 40 odd percent kind of a correction from all-time highs. And thereafter, it's starting a fresh leg of the up move. Now, post that, this current up move has legs to, continue its up move towards 40,200 on the upside. That again coincides with the 61.8% retracement level of the entire decline. So, yes, IT index is likely to continue with its positive momentum. There's a decent upside of around 2,000 points even on the Nifty IT index. So, minor degree pullbacks should be considered among the IT stocks. We believe that Birlasoft has a short covering rally due. So Birlasoft from the mid cap IT space would be one of our preferred bets in the IT pack. If I need, if we look at the metal pack, then metal pack also broke out from an 3 week consolidation on the upside. Pattern wise bullish flag pattern breakout. On the upside, we are expecting levels of 9,300 from current levels, or from the last closing. 8750 is a crucial support. In terms of metals, I think National Aluminium has a good setup. Yeah, it has broken out from a 2 week consolidation. On the upside, we are expecting 182 to 185 from a short term perspective, and crucial support is at placed at 164.
Okay, all right. Now, first rates coming on your screen. We have opened flat in the red at this point of time. Nifty below that 24,900 mark. That is what we are starting off with. A very quiet start, a very muted start for both the headline indices. Given that the sharp surge that we saw today, so this was incoming and this is not coming as a big surprise at this point of time. Let's look at Sensex levels. That is also flat in the red at this point of time. Very like 46 points, that is where Sensex is at this point of time. If you look at some of the sectoral indices, how they are faring at this opening rates, let's see India Wix, because yesterday it saw a sharp cool off of about 14 or 15 odd percent. Right now it's seeing a little bit of a up move, 0.5% gains at this point of time for the India Wix barometer. If you look at some of the sectoral indices, the Nifty IT index, which was one of the definitely top performers like we were discussing today, it's seeing a bit of a cool off, 0.2% cut coming in for the Nifty IT index. Nifty Metal is also seeing a bit of a profit booking with about 0.2% cut. On the other hand, what is doing well in the markets definitely stands out to be Nifty Bank index. Bank Nifty index, slightly in the green at this point of time, so limiting any downside that we are seeing in the markets. On the other hand, Nifty Auto Index also doing well with about 0.3% gains. On the other hand, Nifty Pharma Index, that was one of the top sectoral laggards yesterday, despite the upbeat market sentiment. Nifty Pharma Index is standing tall at this across the sectoral board. Nearly 2% gains coming in for the Nifty Pharma Index after yesterday. Let's look at small caps and mid caps at this point of time. Small caps and mid caps doing well, outperforming the headline indices. Mid caps with a larger set of gains, definitely with about 0.2% gain coming in for the Nifty mid cap index. Let's look at some of the top losers and gainers on the Nifty 50 front. Sun Pharma with about 3% gains after yesterday it saw a slide of about 4 to 5%. Tech Mahindra doing well like yesterday, 1.3% gains coming in for Tech Mahindra. Other than that, we can see Hero MotoCorp, Axis Bank, Dr. Reddy's Lab, all of them doing well. Yesterday, we saw that the pharma stocks took a beating. Today, they are seeing a little bit of, a jump, given that the Trump has lowered the prescription drugs by about 59% compared to what the markets were anticipating, which was up to 80% or so. So we can see the pharma stocks have been trading well at this point of time. On the other hand, if we look at some of the top losers on the Nifty 50, where we can see Hindalco reacting to its Q4 numbers, 1.2% cut coming in, wherein the FY26 guidance have been withdrawn. On the other hand, we can see some of the IT stocks also seeing a bit of a profit booking. Infosys, Wipro seeing a cut of about nearly a percent or so. Asian Paints with about 0.8% cut. Kotak Mahindra Bank also seeing a cut of about more than 0.5%. But yes, Nifty Pharma Index doing well today, given that Trump has lowered the prescription drug prices in US by about 59%. Jatin, how do you see Nifty Pharma Index on the charts? Yesterday we saw that it was on a back foot, given that despite the upbeat market sentiment. Today we are seeing some of the good players doing well. Sun Pharma, Dr. Reddy seeing good gains.
Yeah, see, in the case of Nifty Pharma, there was this uncertainty around that tariff thing that was an overhang for the Nifty Pharma. However, in terms of price pattern that we saw in yesterday's trading session, the Nifty Pharma index formed a hammer pattern on the daily chart. So that is a bullish pattern from a short-term perspective. And again, we are seeing follow-through buying interest on the upside. So yes, I think the pharma index is likely to trade with a positive bias. In terms of levels, what I can say is that 22,100 on the upside is a crucial level to watch out for, or in terms of targets, that is a short-term target, and 21,100 is a crucial support for the Nifty Pharma index. In terms of stock specifics, I think Dr. Reddy has a good setup after a 3 week consolidation. It has taken support at the 20-day average and starting the next leg of the up move, which can take the stock higher towards 1275 to even 1315 on the upside. So Dr. Reddy has a good setup in the pharma pack. If someone is taking a long position, then he should keep a stop loss of 1180 for Dr. Reddy's.
Okay, all right. Let's take one stock in focus wherein we can see a block deal happening. That is your KFin Technologies. 10% equities have been exchanged hands on the block deal front. We can see the stock is also reacting quite negatively, about 6% downtick, which is coming. But KFin Technologies, what are your views on the charts, Jatin? Past 1 month, past 6 months, very small up move we can see. From December highs also, the stock is down about 31 odd percent for KFin Tech.
Is it the name of the stock is K Fintech, right?
Yes, KFin Tech.
Yeah, see, as I can see on the daily charts, the price structure indicates more or less of a sideways range bound kind of a consolidation. 1150 on the upside and on the downside 1950. So in this 200 point kind of a range, this consolidation is likely to happen. If someone is holding, then he should continue to hold. I think more or less it's a range bound kind of a consolidation that is building up in the stock. So no real setups to immediately go buy in the stock at this point of time. But those who are holding should continue to hold with a stop loss around 950. That is from a medium term perspective.
Okay, all right. Let's also talk about Paytm because there also we have seen a block deal. The stock is reacting well with about 4% gains or so. 17.2 million shares have been exchanged on the block deal front. We were expecting that China's Ant Group is expected to sell, which is about 4% stake in the payments firm for about $242 million. And it was expected to sell the stake of about 809 rupees per share. But we'll watch out for more. The details of the block deal will be coming out after the market hours as well. But the stock is reacting quite well today. 4% uptick, 2% downtick at this point of time coming in. How does it look like on the charts, Jatin, for Paytm as a stock for the near term?
See, what I can see that despite the gap down opening, the stock is still holding on to its 40-day average, which was around 830 odd levels. So, and the stock is witnessing buying interest from that support zone. So overall, yes, the gap down has happened, but I don't think so that changes the structure or the sentiment in the stock Paytm. Yeah, it has been consolidating since last 3 weeks, but more or less it's only a consolidation and no real trend reversal for Paytm. Yeah, so this gap down opening that it has seen, I think will be bought into, and over a period of short term, we believe that the stock can head towards 900, 910 odd levels, withholding the 40-day average that is placed at 830. So someone is going long, 830 should be the stop loss, and 900, 910 should be the expected target.
Okay, all right. Let's take another stock in focus, which is your Tata Steel. The stock is down 1% or so. We saw that it has been reacting to its March quarter performance also, where we see profit has more than doubled year on year to about 1300 crore rupees in Q4, and revenue, however, has slipped to about 4.2% year on year. If you look at from the past 1 month perspective, the stock is doing quite well, 11% uptick coming in there. And how the brokerages have reacted, Morgan Stanley is giving out an underweight call on the counter, giving out a target price of about 125 rupees per share. On the other hand, CLSA has also given out a very neutral call, giving out a hold call on the counter with a target price of about 145 rupees per share. Jatin, how does the stock look like on the charts? We were talking about metal stocks in general also, but what is your view on an individual counter like Tata Steel?
See, overall, the metal pack is bullish. Yesterday's price action was pretty decisive. Yes, Tata Steel also witnessed a jump from around 140 odd levels to 153 odd levels. So that's a decent move for Tata Steel, for a stock like Tata Steel. I believe that the stock is in an uptrend. It can continue its up move towards 157 to 159 in this current rally. So those who are holding long should continue to hold with the trailing stop loss at 147. So 147 should be the stop loss even for new entrants into the stock. Overall, I believe 159 is the near-term target in the case of Tata Steel.
Okay. Now that we're also mentioning about metal stocks, also, what is your view on Hindalco? It's one of the top losers on the charts, given that the company has, refrained from giving out a guidance due to uncertain macroeconomics. What is your view on the counter from a near-term perspective, Jatin?
Yeah, so sentimentally, it's negative from a short-term perspective, but we believe that 630 is the level around which the stock should stabilize. There, we have the support in the form of the key hourly moving averages. So I think 1%, 1 to 1.3% kind of a downside is possible in case of Hindalco. 630 is the level around which I'm expecting the stock to stabilize and resume its up move. Overall, the stock is still in an uptrend. No real panic situation or no real signs of a trend reversal as of now. We'll revisit the stock around 630. I think around that it should stabilize. So those who are holding longs can continue to hold with a stop loss of 630. On the upside, we are expecting 655 to 660 from a short term perspective.
Okay, all right. Let's take certain, viewer queries which is dropping in our live feed as well. The first query coming in from Naveen is asking the view on UPL as a counter. UPL today the stock is down about 3% or so, but from the 6 months perspective, Jatin, the stock has exhibited a very positive trend, and even Q4 results have been quite stellar. What is your view on the counter?
See, overall, I think the stock has witnessed a decent up move from 500 to 700 odd levels, and currently it is at the fag end of the rally that we have seen. We are seeing divergences on the momentum indicators, so that indicates that buying interest is lacking at higher levels. So I am expecting some amount of correction towards 620, 610 in the case of UPL, so that will cool off the overbought conditions in the stock, and thereafter we can expect a fresh leg of up move. So those who are holding longs can consider a booking profit even at current levels, and those who want to continue to hold, then 620 is the stop loss level wherein they can continue to hold onto longs. Overall, I believe that the up move as is at the fag end, and we can expect some profit booking at higher levels in the case of UPL.
Okay, some profit booking could be watched out for UPL, and 620 levels, that is what we need to watch out for. All right, let's move on to another viewer query. Well, Satya is asking the view on Allied Digital. He's asking if this is the right time to accumulate the counter. Well, the stock is off about 30 odd percent from its February highs, Jatin, but do you believe that this is the right time to accumulate the counter?
See, overall, in the case of Allied Digital, the range has been between 850 and 1050. So this is the 200 point kind of a range within which the stock is consolidating since a very long time. So since last September, I think it's within this range. So I believe that if someone is holding, then he should continue to hold with a 900 point, with a 900 level stop loss. But if someone wants to start afresh, then I would suggest to wait until 1050 is breached on the upside. So only thereafter we can expect a sharp trending move on the upside. So for fresh entrants, wait for a breakout above 1050. For those who are holding, 900 is the trailing stop loss with which you can continue to hold.
Let's move on to another viewer query. Well, Debu K is asking the view on Shakti Pumps after good set of results. How does it look on the near-term charts? Shakti Pumps, how does it look on the charts? It's down about 30 odd percent from its January top as well, but the Q4 results were quite promising.
Yeah, see, in the case of Shakti Pumps, the structure is a little bearish, I can say. What we observed is that the pullback rally fizzled out around 1020 odd levels, and thereafter the stock has not been participating in the up move. So the interest is not there currently in the stock. We are expecting a drop towards 780 or even 750 odd levels in the near term. So I am expecting correction in the case of Shakti Pumps towards 750 odd levels from a short term perspective.
All right. Let's move on to another viewer query. That is your Cholu is asking the view, what is the expected value of Bajaj Finance? Past 6 months, the stock has been quite resilient also, Jatin, but the company has also announced a stock split and a dividend after following its Q4 results. What do you expect going ahead the fair value of Bajaj Finance should be?
See, in the case of Bajaj Finance, it has been one of the outperforming stocks in the recent past. On the upside, we are expecting levels of around 9,400 on the stock Bajaj Finance. But overall, I think there's a decent run up in the recent past, so it can enter consolidation phase between 9,400 and 8,400 wherein the 20-week average is placed. So I am expecting a consolidation post a stellar run up. It has witnessed in the last 6 odd months. So I am expecting a consolidation. It can consolidate between 8,400 and 9,400.
Okay, all right, 9,400 consolidation levels, that's what you're expecting. Let's move on to another viewer query. Manthan Mohan is asking the views on Tata Motors. Well, Tata Motors is expected to report its Q4 numbers today, and Moneycontrol is expecting that the net profit is expected to climb about 33% year on year, and revenue is expected to soar about 15% year on year. In the past 1 month also, the stock has exhibited good resilience, 15% uptick. Jatin, what is your view on the counter? Can we expect some turnaround in the company, in the stock price?
See, the stock has already rallied from 540 odd levels to 700 odd levels. So I think that's a decent 25-30% kind of an up move in the last 1 to 1.5 months. So that's a decent up move. And post this up move, there are signs of some consolidation at higher levels. So immediately, I would believe that there could be some amount of consolidation, but overall, we believe that 755 is the level around which we can continue to hold on, because 755 on the upside is the 40-week average where we are expecting this rally to continue. So hold on in the case of Tata Motors with a trailing stop loss of 696, and we are expecting levels of 755.
Okay, all right, 755 levels, that's what you're expecting on the resistance front. But just one last question before we let you go, Jatin. Now, what are your top picks at this hour? We're seeing a good set of run up at this point of time. Definitely today was a consolidation one, but any picks that you're watching out for keenly?
Yeah, see, we have two picks on the long side. The first one is Bajaj Auto. So Bajaj Auto has witnessed a 3-week kind of pullback towards its daily lower Bollinger Band, and yesterday we did see a decent up move. So that up move has taken form of an impulsive pattern. So we believe that 7,800 is a near-term bottom for Bajaj Auto, and on the upside we are expecting 8,500, 8,600. So Bajaj Auto is our first pick. The second pick is from the financials, that is HDFC AMC. So HDFC AMC did witness a pullback towards its 40-day average, and thereafter it's starting a fresh leg of up move. So HDFC AMC is a buy at current levels. The stop loss is should be placed at 44.25, and on the upside we are expecting 47.50 from a short-term perspective.
All right, Bajaj Auto and HDFC AMC, that is what we need to watch out for. But with that, we have to let you go, Jatin. Thank you so much for your time, and we hope that we connect with you soon. All right, before we move on to the next guest of the show, let's take a quick check of the markets at this point of time, how things stand. Well, Sensex has extended its sell-off today at this point of time. Sensex is down about 836 points. Nifty is also down about 200 points, nearly 1% downtick coming in for Nifty. 750 levels, below that levels, that's where we are at. If you look at some of the sectoral indices, definitely Nifty IT index is contributing to the losses with about a larger set of downtick, with about 1.4% cut that we are seeing on Nifty IT index. Nifty metals also seeing a cut of about more than 0.5% or so. Nifty private banks with about 0.5% or so. Bank Nifty index also with 0.5%, nearly 0.6%, that is for Bank Nifty index. On the other hand, what is doing well for the markets, that is your Nifty Pharma index with about nearly 2% gains, given the large profit booking that we saw yesterday, given the nervousness that we saw after Trump announced lowering of prescription drug prices. Mid cap and small cap indices, small caps are outperforming at this point of time, 0.2% gains coming in from the small caps front. On the other hand, mid caps have loosened out, and it is flat in the red at this point of time. So yes, all in all, a very negative trend coming in for the markets given the large, spectacular rally that we saw yesterday. But with that, let's move on to the next guest of the show. We have Aishwarya Dadheech, founder and CIO, Fident Asset Management, joining us. Aishwarya, so good to have you back. Quite a big gap that we started up with yesterday, but today we're seeing a consolidation. How do you see the geopolitical tensions impact on the markets to go ahead? Can we say that the worst is behind us?
Good morning and good morning to all the viewers. Nice to be back here. Obviously, a lot has happened in the last 1 or 2 months. And I would say yesterday was kind of a ceasefire on the trade talks, like what we saw the ceasefire between in the subcontinent 2 days back. And I think that is what market is rejoicing. But what is more important is, there is a kind of a risk on sentiment which is building up globally, right? Obviously, the one of the biggest impediment was the trade issues which kind of been getting resolved. I won't say there's been resolved. There's kind of a truce which has been reached, and that's kind of a risk on sentiment which is now prevailing globally. So the risk of US getting into recession is now getting lower. Like there's from 45 to 50% probability that has gone down to almost 25 to 30% probability. And that's why we witnessed, IT as a pack roaring yesterday with almost an index at 6% higher. But we understand this is a truce for 90 days. There will be shares of ups and downs and announcements and tweets and whatnot. And market will have to take that into consideration. Back home, though we are at a ceasefire, but that we are not completely saying that it's completely over. We will see more of, possible intervention from either side and things like that, which will bring volatility to the market. So these are the two major events which possibly will provide more visibility about how the market will look like. But when coming to fundamentals, what thing has really worked in the last, I would say, month or two, in all sort of those broha is how our quarterly results pan out for this quarter, right? We are almost two-thirds of the companies have reported the numbers so far, and the outcome is pretty nice. So if you look at Nifty 50 companies which are reported so far, they have been reporting almost 5% kind of an earning year-on-year growth. But when you go deep down in the broader market, if I look at for BSE 500 companies or small cap, that number is inching higher to 8-9%. So if you remember that the number we always talk about the earning growth of say 10% for this financial year and 14-15% for the next financial year, that is not sharply been revised downward, which was the fear possibly 3-4 months back. So the kind of is some kind, I won't say things are really improving, but they are not deteriorating further. That has been the reason possibly that when we saw that FI by money in the last 2 months, we have clocked in or close to $3 billion, is possibly a kind of reprise that they are witnessing. And this should give some sort of solidification to the market from here onwards, especially in the broader market, for markets to do well. So let's see how all these geopolitical things move through. There is a lot always happening, but I think market has been shown a lot of maturity in the last 2 months.
Okay. Aishwarya, we are just 5% away from the lifetime highs. So do you expect this year is the year where we can actually reach the lifetime highs and even go beyond it?
That is, I would say, more like, a formality if the FIs flows continue, because see, they have been selling huge amount and they have not even bought 5% of what they have sold so far. And if you look at the mutual fund data which came for April, I would say they are also not very bad from that perspective, decent set of data. So if that things comes in place with FI continue to see buying, and if our businesses growth sees improvement, Nifty heading coming back to all-time high might be a formality. But what is really important for us to understand is that broader market is still far, far away from where it was. Even if you see when market started tumbling big way in December, Nifty was at close to 24,000, 24,000 kind of a number. As Nifty has easily crossed past, so YTD we are sitting on good positive number, but that not the case for the mid caps and the small cap. The small cap index close to 18,000 is still struggling around 15,500. So they're still far away from those levels. And that is where, I see a lot of these individual clients' portfolios, they're not seeing that kind of gain, even despite Nifty touching 25,000 there. So obviously on Nifty side, we might be there, but we are still far away, Lovisha, from the broader market to come back to where they were at least 6 months down the line.
Aishwarya, how are you finding the valuations of the markets at the current juncture compared to the earnings we've had so far? Do you still believe that we are at an expensive valuations at this point of time?
I believe valuations are reasonable. I won't say they're very, very expensive. There's some segments, a mid cap as a segment is probably trading at 30-35% premium to large cap. That segment is pretty, pretty expensive. But when I look at the, as you said, on valuations and growth, what we have witnessed and what is the expectation going forward for FY 26-27, Nifty is trading at roughly around 19 times FY 27. FY 26, we are close to 21 times. So we are not cheap, but we are there that it can make a case for healthy compounding if someone invest here. Small cap is an area where we are seeing, obviously it's still a 10% premium to large cap if you look at the last 5-10 years of historical track record. But there are pockets where we are seeing the growth is much faster compared to what derating that we have witnessed, right? And that some segment, where I believe there is more opportunity from risk reward perspective on valuations, where investors can go and put their money. Mid cap is what we are staying away for timing. I think valuations are very punchy over there.
Okay, okay. Aishwarya, I want to understand, given that the tariff uncertainty we had between US and China, and now that is already out, do you see any impact of flows into India as well, given that, both of the countries are vowed to reduce down the tariffs at this point of time?
So obviously, whenever there's a risk on sentiment or whatever is happening, it is a win-win situation for majority of the emerging markets, and India has been seen as a big beneficiary of the whole thing. But we should not forget, a lot of this money was finding its place in China before all this trade and things started. I have some fear that that money will start again chasing China once they have more clarity on trade side. So we obviously will have some ripple effect and some inflows into the market, but from valuation perspective, China is very, very attractive compared to India, right? And there's a lot of talk about this China plus one and shifting of manufacturing base and everything and all the narrative and the story around it. In short, it will take a lot of time. Even both India and other counterparts who want to shift capacity and manufacturing here, it can't be done in a jiffy. So all of that will take time. The narrative is building for India, but I will be surprised. I will not be surprised to see if some money start again moving back to China after this. So China possibly will be a bigger major beneficiary in the short term. India will possibly get the benefit in medium term to long term. The flow that we have witnessed in the last 1 or 2 months, I believe there's only two reasons. First is some sort of softening of dollars. We have seen, DXY index coming from almost 113, 14 to close to 100. And then we saw some improvement in currency and things like that, especially for India. And India was seen as kind of an oasis in the turmoil globally. But lately, we have seen that the geopolitical scenario erupted here. So I will be more watchful about the data moving across, the money moving across emerging markets. India should get its share of pie, but we can't rule out China, please.
Okay, okay. Aishwarya, I want to understand about the pharma stocks because yesterday we saw, the pharma stocks were under pressure, but today they have been, they're back in action after Trump's announcement of slashing prescription drugs by about 59% or so. So do you believe that this is not going to, least impact the pharma stocks given that India has always been a generics exporter to the US markets, or how do you see this to pan out?
So I think everybody in the market globally know how Trump works and what's his thought process. So it's very difficult to tell whether he is trying to really mean it or it is kind of rhetorics. Because to see it on the ground, I believe what he's trying to talk around is not doable easily. Right, a lot of these companies will find it legal ways to fight it out, and we are talking about something which we have to understand is more to do rather than manufacturing. It is more to do with distribution issues, and that is the place where you should try to hit it. And we all know that in US there is 4 or 5 distributors who is majority of 75 to 80% of the whole distribution pie, and that is the people who are trying to take the calls, right? When you talk about those companies who have been spending on R&D, who have been doing models of investment, they possibly will take a backseat if their profitability or their cash flows are hit. And coming back to India Pharma is basically to generics. So to us to be get impacted, generic segment in US has to be get impacted, which will be a second stage once the main innovators are getting impacted. So it's a long drawn process. And I believe, I'm not expecting too much to happen. Possibly that in some point of time, some negotiation here or there, and they will again will see a rebuttal from US side. So I believe we are sweetly placed from a pharma space in India. We should be watch out because the price erosion has already been happening in US for the last 4 5 years, and this is another level of price cut which has been talked to. This is like trying to create a pie in the sky kind of a scenario. It's not very easy to do. So what kind of recovery we are seeing in pharma today is possibly that reality acceptance that it is easier said than done, and that's why we are seeing that kind of it. I would be more excited to look out into opportunities in the pharma space, if not US exposure to pharma, even say IPM based or CDMO, CRO, that sweet space, which will be a beneficiary of irrespective of what happens on in the US innovators and drug companies on the pricing side. So I think this is a more of an opportunity to me to rather than running away from.
Okay, okay. And how are you positioned on IT stocks right now? Because we are seeing that the trade deal between US and China has been announced, and the tariff uncertainty is out of the way. How do you see the entire perspective? Do you change your perspective on the IT pocket at this point of time, given that there was a little bit of conservatism that was coming in before the Q4 results?
Yeah, so even there has been a conservatism on the IT outlook, and the quarterly results of some of the large IT pack was not heartening. So it was pretty disappointing. But when we went through, in finer details, we realized that possibly the way people were writing obituary about the IT sector as a space was, I think, unfounded. A lot of these mid and small IT companies, even the couple of the large IT companies, have done reasonably well. When you look at the deal pipeline, things are, not that alarming. Obviously, the way US has been talking about rates and the recession fear is what was of worry for ITS pack. And as I said, the probability of recession in US is getting down with more truths happening and more sensible trade talks happening globally there. So now we are pretty constructive on ITS space. There are sectors, there are companies which have been doing relatively well. They are seeing their deal pipeline going up. Currency has been a kind of blessing in disguise for the IT sector per se. So we are constructively being positive on IT. Now we have actually gone overweight on IT in the last month or so, given the way the opportunity prevailed in the sector. And we are sticking with the names which are showing more resilience in growth. So I believe IT is possibly will be a difficult one, but it could be blessing in disguise how things play out in the global pie over there. And on valuation side, obviously the IT sector is not very cheap, especially mid and small cap. But when we look at in conjunction with growth, there is some cases of where money could be allocated in IT, and we are putting our money.
Okay, okay. All right. With that, we have to let you go, Aishwarya. But thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovis. Thank you so much.
All right. All right, let's take a quick check of the markets because we were in deep in the red at this point of time, and Sensex is down about 800 points, 700 points, so to say 750 points. That is where Sensex is at. Nifty is also down about nearly 200 points. 0.7% cut coming in for the Nifty 50 index below that 24,750 mark that we saw. So from 24,900 we have come down to 24,750, below that 24,750 mark as well. If you look at some of the sectoral indices which is not contributing to the Nifty's upside, that includes the likes of Nifty IT index, are seeing a cut of about 1.2%. Other than that, we can see Nifty Auto Index, Bank Nifty, all of them on the losing end at this point of time. The only sector which is shining in the trade today, that is your Nifty Pharma Index with about 1.7% of gains, and Nifty PSU banks also doing well at this point of time with about 1.5% gains coming in for the Nifty PSU banks. On the other hand, if you look at the broader end of the markets, mid caps and small caps, both of them are outperforming at this point of time. Small caps definitely with a larger set of gains, with about 0.5% gains coming in for the small cap indices. On the other hand, if you look at the top gainers on the Nifty 50, majority of the pharma index, pharma stocks have been dominating the pack, be the likes of Dr. Reddy's, Sun Pharma, Cipla, all of them seeing a gain of about 1 to 3% or so. So yes, pharma index helping offset any of the loss that is we are seeing in the market, but otherwise a very negative trend, so to speak, for the markets today. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing bell, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.